Hi, Jeff Caldwell here with agriculture.com with your closing grain prices for today, Tuesday, the 24th of July. It was a slaughter today on the CME Group trading floor with sharply lower prices across the board. Soybean futures at one point touched slowing down, and on some growing anxiety about the European debt crisis and how that could have a trickle-down effect into a lot of different sectors of the economy, as well as some increased rainfall prospects here in the next few days in parts of the Corn Belt. Again, just like before, whether or not that means much to these crops that are really hurting out there on the countryside. So to today's prices, the September corn futures contract ended the day 24 cents lower at $7.90 a bushel, while the December contract was 7.25 cents lower, $7.78 1/4. Soybeans, the August contract ended the day 49.25 cents lower at $16.49 1/4, while the September contract closed 52.25 cents lower at $15.94 1/2. Wheat, the September contract closed 34 cents lower at $8.78 3/4, while the December contract ended 30.75 cents lower at $8.88 1/4. Now, like I said, there's a lot of reason for a lot of anxiety out there right now, both as it pertains to the ag commodities here in the U.S. and then just with the macroeconomy worldwide. There's sort of a circular effect going on here relating to a lot of different sectors. First, we've got the drought here in the U.S. that's continuing to push down yield prospects. We've got the European debt crisis situation happening, and that's really causing a lot of anxiety and pessimism in all the different commodities, from the grains to the equities and everything in between. And then one analyst said today that China, obviously there's still going to be demand coming from China for these grains and for these ag commodities, but China is sort of anxious about the EU debt crisis as well, and so that's going to have some implications for the levels at which China buys commodities, so some analysts believe, and so then that translates into a shift in demand for the grains in South America and the U.S., and so it's almost like a jet stream of sorts going around the world here in terms of these major factors. One analyst did say today that in regard to the volatility we've seen, we've taken well over $1 off the soybean market here just in the last 2 days, and so it's a major volatility here, and one analyst said, we could see these swings of as much as $1 to $1.50 in these 1 to 2 day, well, obviously more than 1 day, but 2 to 3 day periods here, swinging both ways, lower and higher, in terms of how these prices fluctuate as we move into this fall, especially, and start to see some of these yields come out of the field. Scott Shell, the option eye in agriculture.com's marketing talk, said today that really the pullback in these prices in the last couple of days is really kind of a good thing fundamentally for these prices on the trading floor. He said, in his words, it's going to shake the weak longs out of this market and out of those positions, and so it's going to, in the end, fundamentally strengthen the prices that he sees as having still a ton of potential to move to the upside, especially early next month as the USDA enumerators and crop specialists start getting out in the field, start taking some of these yield tallies themselves, as opposed to some of the survey work they've done earlier in the summer. And so once we start seeing more of these lower yields come out of the field, Scott said that still the sky is still kind of the limit in some of these pits. Turning more to the local factors here, there are some rainfall chances here in the next few days in the Corn Belt. Here in central Iowa, we've been hearing about some potential rainfall here tomorrow, Wednesday. However, as that target gets closer, the rainfall chances are sort of starting to dwindle. However, we do have a little bit better chance of getting a little bit more widespread moisture. I'm not sure how heavy that may be, but that's looking like that could come by Sunday. We are following along with a crop tour moving through the Corn Belt here this week. One that started yesterday in Ohio and moved its way through Indiana and into Illinois, into central Illinois here today. Yields are coming in still quite variable, yet we are seeing one consistency in the fact that they are still all well below previous yield averages. One field there in west central Indiana and some of these fields into Illinois are bringing up very light yields. One field, the tour specialists there pegged the yield potential in that cornfield at 14.5 bushels an acre. So there's a lot of rough conditions out there. I talked to a farmer here today in west central Indiana who said that right around his farm things look okay, but you go 3 miles to the north or 1 mile to the south and things go downhill very quickly. So we're still seeing a lot of highly variable crop conditions, and we'll definitely probably see a lot more of that once we start getting some more solid crop data from the federal government and from other agencies that go out and start doing some yield counts. So again, a sharply lower day on a lot of bearish influences today here in the grain market. And so for agriculture.com, I'm Jeff Caldwell.